This is the Everything Financial Radio Show on the Legacy Radio Network. I'm glad you're joining me today. My name is Dennis Tubbergen, your host. We have a terrific show lined up for you today. I'm very, very excited to have with me on the show today Dr. A. Gary Shilling. You've probably read Dr. Shilling's columns in Forbes magazine. You may have seen him on CNBC. You may have heard him on Bloomberg Radio. Well, today he joins us here on the Legacy Radio Network. Also, Jim Rogers, past guest here on the Everything Financial Radio Show and former co-founder of the Quantum Fund, said, wait until after the election. He expects some economic fireworks, to say the least, after the election. Finland this past week, the foreign minister of Finland is openly stating that they are preparing for a Eurozone breakup. Another past guest here on the Everything Financial Radio Show, Dr. Chris Martenson, with a couple of his colleagues this past week, said that energy, food, water, and the economy are all facing similar challenges. We'll talk about that. And the deputy governor of the Bank of England told a bunch of English bankers this past week they could all be out of business by Christmas. You'll want to hang with us and hear what he had to say. If you've not already requested your 2012 guide, Surviving a Market Crash, let me invite you to go to our website, investingapproach.com. Let us know where to send you your complimentary copy. Consider it a second opinion. It contains research as to where we are economically speaking, as well as strategies. We also discuss these topics at our discovery groups. We have 3 coming up in September. We'll be at Sunnybrook Country Club in Granville on Tuesday, September 11. We'll be at Watermark Country Club in Grand Rapids on Thursday, September 13. And we will be out at Boulder Creek in Belmont on Tuesday, September the 18th. You can go to personallegacyseminars.com to get more information or to register. If you have not attended a discovery group in the last 90 days, you are very welcome to go and register. Also, if you would like at any time to go back and listen to an interview that we have with one of our guest experts here on the program, you can go to everythingfinancialradio.com, and all the past interviews are archived there. You can just click on the archive show link, and all the interviews are there. I'm very pleased to have with me on the Everything Financial Radio show today Dr. A. Gary Shilling. Gary is the founder of the A. Gary Shilling Company, Inc., an economic consulting firm. Dr. Shilling is an investment advisor for institutional as well as individual clients. He is a Forbes columnist and the author of many books. The latest book titled The Age of Deleveraging, Investment Strategies for a Decade of Slow Growth and Deflation. And Dr. Shilling, welcome. Thanks for being on the program.
Oh, my pleasure. Glad to be with you.
You know, Gary, interestingly, with many concerned about inflation due to the policies of world central banks, including the Federal Reserve, and now there's talk of maybe a third round of quantitative easing, you're looking for deflation. Can you explain?
Yeah, that's right. And deflation is a matter of having more supply than demand. It depresses prices. We've seen that in housing recently. We've seen it in commodities since the beginning of last year. And I think we'll probably see it in general prices. The consumer price index has been literally flat for the last 4 months. Obviously, a lot of people worry about all the monetary and fiscal stimuli, which were really intended to revive the economy, and people worry about inflation. But the facts are that despite these immense efforts, the deleveraging in the private sector here and abroad has been so immense that it has overwhelmed these monetary and fiscal efforts. What's the evidence? The economies of the world are barely growing and contracting in the case of Europe and maybe the U.S., and a hard landing shaping up in China. So it really tells you that these efforts, massive as they are, have simply not offset the deleveraging that's taking place in the private sector.
Gary, is it your opinion that the United States is already in a recession, or are we simply headed that way? What's your forecast for the U.S. economy?
We probably are already in a recession. Now, we won't know for months, quarters, maybe even years until they get all the data revised. But the only sector that could really support the economy is the consumer. Everything else is weak. State and local spending being cut back with with pension fund problems and budget woes. Inventories are looking excessive. Nobody's going to build them. The housing industry, whether you think it's bottom or not, is certainly going nowhere. You look through all these sectors, exports, they're weak because our foreign trading partners aren't buying much of what we sell. So it's only the consumer, and the consumer looks like their mini spending spree last year succumbed to all the longer-term pressures that people need to implement to save. They've sucked all the money out of their houses. They don't trust their stocks. Post-war babies need to save for retirement and so on. And one of the interesting pieces of evidence is that in April, May, and June, retail sales declined 3 consecutive months. Now, that has happened 29 times, 3 months in a row, since the data started in 1947. In 27 of the 29, the economy was either in or within 3 months of the start of a recession. So I think there's pretty strong evidence here that consumers are retrenching, there's nothing else to hold up the economy, and we're probably in a moderate recession already.
Gary, to maybe follow up on that comment that you just made, I've had a number of guests on the show, like Harry Dent, Peter Schiff, and others that share your deflationary view that are not only predicting a recession, but due to the high level of consumer debt, not to mention sovereign debt, a depression not unlike what we saw in the 1930s. Would you take that view as well?
It's sort of a matter of how it works out. You know, this book that you cited, The Age of Deleveraging, it says investment strategies for a decade of slow growth and deflation. I think this deleveraging is a decade-long experience. We're about 5 years into it, and at the rate we're going, it'll take another 5 to 7 years. That's the way I think it will be worked out. Now, whether you want to call that a depression is sort of in the eyes of the beholder. I'm not looking for the absolute financial collapse. That could happen, but I think that that's more likely in Europe. But it certainly is true that, for example, if a major European bank bit the dust tomorrow, the intertwining of banks globally is so intense that it would drag the U.S. financial sector in, and that's the sort of thing that could make it even worse. Of course, that's what we had in 07-09 recession, was a combination of a financial crisis and the spillover into the goods and services side of the economy.
Gary, I want to go back because you'd mentioned the only thing that really can help the economy is the consumer. And in your recent newsletter, the August issue of Insight, you stated that the U.S. personal saving rate will probably return to double digits. So that doesn't bode well for the economy. But given the deleveraging that's taking place, how can the personal savings rate get back to double digits?
People simply save more of their after-tax income. It probably happens more on the margin. In other words, rather than people dramatically cutting back on their spending, although they're doing that right now, as I mentioned earlier, with declining retail sales, over time, it probably simply means that more of the increase in their income goes into saving and less into spending. And that's the reverse of what happened from the early 80s until into the middle of the last decade, when the saving rate declined from 12% to less than 1%.
In case you're just joining us, we are chatting with Dr. A. Gary Shilling of A. Gary Shilling and Company. And Dr. Shilling, in the time we have left in this segment, if someone would like to learn more about your work or learn about your newsletter, what would you suggest they do?
Well, they could go online to our website, www.agaryshilling.com, and there's no C in Shilling, it's Shilling, or they could call our toll-free number to inquire about our Insight newsletter. It's 800-346-7444.
We will continue our conversation with Gary Shilling when Everything Financial Radio returns here on the Legacy Radio Network. Stay with us. Welcome back to the Everything Financial Radio Show here on the Legacy Radio Network. We will continue our conversation with Dr. A. Gary Shilling in the next segment.